How to pick dividend stocks. What are the most important things to look for in dividend companies? Hey guys, my name is Ken. Today we are going to review dividend stocks, how to pick them, and important things to look for when evaluating companies. Also, I'll give you a list of dividend-paying stocks you might want to consider as long as you double-check on your own. Before we go, just trade the like button and invest in subscription to the channel for more useful content. You can also buy me a coffee, the link is down below in the description. Dividend stocks can provide us with predictable income as well as long-term growth potential. However, not all dividend stocks are great investments, and many investors aren't sure how to start their search. So therefore, let's start with the tools you need to find great dividend stocks yourself. If you are new to dividend investing, it's a smart idea to get acquainted with what dividend stocks are and why they can make excellent investments. Once you have a firm grasp on how dividend stocks work, a few key concepts can help you find excellent dividend stocks for your portfolio. The first is payout ratio. A stock's payout ratio is the amount of money it pays per share in dividends, which divided by the earnings per share. In other words, this tells you what percentage of earnings a stock pays to shareholders. A reasonably low payout ratio, let's say 60% or less, is a good sign that the dividend is sustainable. Another thing to look at is history of raises. It's a very good sign when a company raises its dividends year after year, especially when it can continue to do so during recessions and other tough economic times like the COVID-19 pandemic. If the company has steady revenue and earnings growth, it's another good sign. When looking for the best dividend stocks to own for the long term, prioritize stability in the companies you consider. Erratic revenue, which is like up one year and down the next, and all over the board earnings can be signs of trouble. Another good sign for a company is durable competitive advantages. This is perhaps the most important feature to look for. A durable competitive advantage can come in several forms, such as a proprietary technology, high barriers to entry, high customer switching costs, or a powerful brand name, just to name a few. The number 5 thing to look for is high yield. This is last on the list for a reason. A high yield is obviously preferable to lower one, but only if the other 4 criteria are met. A high dividend is only as strong as the business that supports it, so compare dividend yields after you make sure the business is healthy and the payout is stable. Dividend stocks are long-term investments. Of course, even the most rock-solid dividend stocks can experience significant volatility over short periods. There are simply too many market forces that can move them up or down over days or weeks, many of which have nothing to do with the underlying business itself. So while the companies that I'll be talking about should make great long-term dividend investments, don't worry too much about day-to-day price movements. Instead, focus on finding companies with excellent businesses, stable income streams, and preferably strong dividend track records. And the long term will take care of itself. Now it's time for the list of dividend stocks. Here are some dividend aristocrats and other great dividend companies for your attention. The Dividend Aristocrats Index, which is maintained by S&P indices, is a great place to start. This is a collection of several companies that have increased their dividends for at least 25 consecutive years. That means that every company in the index successfully gave investors raises not just during the good times in the market, but also during more volatile downturns such as the dot-com crash of the early 2000s, the financial crisis of 08-09, and the COVID-19 pandemic so far. They may be a safer investment than the average dividend-paying stock. Here are 5 great companies from that index to start your search. I listed them in no particular order, so if the company is listed first, it doesn't mean nothing. First one on the list is AT&T. Telecom giant AT&T has increased its dividend every year for almost 4 decades and receives utility-like steady income from its core wireless phone and high-speed internet customers, and the company's aggressive moves into entertainment could provide long-tail growth potential. Second company is Realty Income. This is a real estate investment trust or REIT that primarily invest in single-tenant retail properties. Most of the tenants operate recession-resistant businesses like drugstores, dollar stores, and convenience stores, and they all sign long-term leases with gradual rent increases built in. Realty Income is one of the newest members of the Dividend Aristocrats, having joined the index in January 2020 after reaching 25 consecutive years of dividend increases. Note that the company hasn't missed a monthly distribution to investors in 50 years. Next one is Target. You may be noticing a common theme here. Target sells products people need. It has done an excellent job of growing its online and omni-channel sales, such as by offering curbside pickup. And while sales in some of its departments, such as electronics, may suffer in recessions, it is generally a well-insulated business in tough times, which is why it has given investors 52 years of consecutive dividend raises. Johnson & Johnson and Procter & Gamble are also great dividend companies. I reviewed them in videos earlier, you may check out them here. The Dividend Aristocrats aren't the only place to look though. Many excellent companies simply haven't been paying dividends or haven't been publicly traded for long enough to be included in the index, although they can still make excellent long-term dividend investments. Here's a list of dividend-paying stocks with characteristics such as excellent brands, loyal customer bases, and favorable demographic trends that are also worth putting on your radar. So here's the list. First one is Verizon. Like AT&T, Verizon enjoys utility-like income from its wireless communications and high-speed internet customers, and the fact that the Verizon has significantly less debt is appealing to many investors. Unlike AT&T, Verizon is more focused on its core business and should be one of the biggest beneficiaries of the upcoming transition to 5G mobile technology. Next one is Microsoft. As one of the largest companies in the world, Microsoft has steadily increased its sales, and especially attractive feature for dividend investors is its focus on recurring or subscription-based revenue sources. The company has a solid balance sheet with more cash than debt and a very low payout ratio that leaves tons of room to grow the dividend. Given its 18-year streak of dividend increases, we wouldn't be surprised if Microsoft joins the Dividend Aristocrats Club soon. Here's another great company is Apple. Tech giant Apple has been paying dividends for only a few years now, which is understandable given the rapid growth it experienced in the early years of the iPhone and iPad. Companies tend to choose to reinvest profits into business while in growth mode. Even so, Apple has an incredibly loyal customer base, and since its devices are designed to work well with each other, the company has a niche tech ecosystem that should keep its revenue strong. And Apple's rapidly growing subscription services business is providing growing source of recurring revenue. Next great dividend company is Welltower. A real estate investment trust focused on healthcare properties, particularly senior housing, Welltower should benefit from a long-tail demographic trend as the older age groups of the American population gradually get much larger over the next few decades. Let me know in the comments what dividend stocks would you recommend for portfolio. I read all the comments and really like replying them. Here are some more other videos about personal finance and investments. Make sure to subscribe the channel, like the video and hit the notification bell. See you in the next video.